trading a Robinhood account from $3,000 all the way to $1 million. And I'm showing you every step of the way how I get there. As of Friday, November 7th, we closed the account at $33,275. On the week, we're still down 4K. On the month, 5K. But last 3 months, we're still up. We're just holding strong. We really got saved by earnings on a lot of the different stocks that we're playing, but the market weakness is just really brutal right now. On Friday, we actually swung the account over $4,000. So during the morning sell-off, we were down like 3,500, and then we swung green into close. And that's really just to the fact that volatility was so high and there was potential talks of reopening the government, which is what we're actually starting to see here today on Sunday. They are talking about, both sides are talking about reopening the government using some sort of continuing resolution. It's more than likely that the government is going to reopen probably later in this week or potentially even next week. But the market doesn't need to have the government reopen today for it to rally because it is forward looking. So as long as there's a path to reopening, it's more than likely that volatility will drop and the market will continue to push to the upside. So really, really bullish news overall that we're getting so far through the weekend. And it looks like they're going to be voting here within the hour. So we'll see what comes from that. As long as that's positive, it's more than likely that futures will gap higher and we could see a big green day tomorrow because the VIX is around 20 right now. So really, really bullish overall. I'm going to give you guys a rundown of really all the plays that we're looking at. We just had earnings on a bunch of the different stocks that we were looking at, like Upwork, Snapchat, Unity Software. We're going to talk about all those. EOSE is starting to shape up pretty nicely, as well as T1 Energy. And then, of course, we got Nebius on Tuesday reporting earnings. So I'm really, really bullish on this stock. It's like the #1 position in the account. And then we'll cover a few others like Zeta as well, posted earnings. Everything beat and raised for the most part. Grab did okay, not bad. So we'll talk about everything here in the challenge portfolio, and Will get into the charts. But if you aren't already, make sure you guys join the Discord because I do post all the entries and exits here for free, as well as we will be doing another giveaway at 5,000 subs. Congrats to all the people here that won a monitor, a headset, and $150 of Amazon gift cards. So we'll do another one of those in the future, but make sure you guys join that. But really, the biggest position right now is Nebius. Nebius is $1,000 in shares, and then we have $4,500 in options. So I'm very, very bullish in the near term for Nebius, and we're taking a pretty outsized bet here that Nebius is going to blow out earnings, probably announce some other sort of hyperscaler deal within the next couple months. Really, really bullish on this company. Let's just hop into the charts because I did go ahead and prepare some information, as well as we can look at the technicals from a price level perspective to get an idea of where I think price is headed over the near term so you can position yourself accordingly. So Nebius, it did come back down into that 94 range, and then we had this really strong rally all the way back up to $135. A lot of people were panicking on this initial sell-off, and we found out that JP Morgan, as well as institutional ownership, went up during that sell-off. There was a lot of dark pool activity around $103, $104, showing that institutions were buying up Nebius shares while retail was selling off. Now, we did come back down, and we actually did somewhat of an interesting price action, right? So we had this move higher. The overall market sells off, and Nebius is a high beta stock, and really that just means how correlated it is to the overall market. So if the S&P 500 moves 1-to-1, it has a beta of 1. Nebius, you could say, has like a beta of 2 or even greater than that. So like a 1% move in SPY could result in like a 5% drop in Nebius, and that's just really just saying like how much it's going to move relative, how volatile it is relative to the index. But nonetheless, Nebius, it did sell off. It had a couple gap downs. It came back up and filled this bear gap that formed on Monday to going into Tuesday, and then it filled the previous bull gap back on Friday, October 24th, and then we kind of bounced and filled this gap. So this was really bullish overall because we gapped below it and then we filled above. Everything really rallied into Friday, and the VIX dropped quite a bit, which is just like very bullish overall. Like looking at the S&P 500, we're trying to come back up and get back over that trend line. We might actually gap back over that, and then even on the S&P 500, which is really just the index, which is futures, you can see that we've come down and dropped below this trend line 3 times now, and it's price, the bulls are not backing down. They're just pushing it back up and over, even through all this volatility. And then the VIX did come back up to around 22, but look at that big drop. So bears were really afraid on Friday of any potential news that could happen over the weekend. We did have bullish news about the government reopening, so they were right to cover out on Friday, and that was really why we had this massive move to the upside after this initial drawdown. And funny enough, there was actually 71% up volume. Earlier in the day, it was much lower. I think it was like 60% down volume, and then it flipped 71% up volume. So that's very bullish. People really came in and started buying that dip. But looking at Nebius, we do have earnings, so it's always a coin flip. They have a lot to talk about, so in my mind, it's very difficult for Nebius to sell off because of all the things that they have in the pipeline right now. Not only did we have JP Morgan here buy into Nebius, you can see they are, I think, number 9 holder of Nebius shares now, but they added 526,672 shares during Q3, and it's likely that they're adding more because Nebius is growing at an insane rate, mostly due to the Microsoft deal, but there's more than likely another hyperscaler deal coming very soon. We can see here that this is like somewhat of a bit of a guesswork that someone did around how much megawatt they are going to have each quarter based on just like articles and clippings and what management has said. And you can see that, by the end of 2026, it's possible they could have 6.2 billion in annual recurring revenue, which is extremely bullish. That would mean that Nebius is more than likely going to probably push over 100% on the current stock price. Right now, I think it's probably closer to $4 to $5 billion by the end of 2026, but nonetheless, that still means there's a lot of upside here on the underlying share price. They are tripling the capacity in Finland, and now there are some rumors that either Meta or Microsoft could be doing a deal on that 75 megawatts that's going to be coming online in Finland. It's this Mensala location that you're seeing here. 75 megawatts is how much they can increase the capacity. They actually announced that back in October 2024, but nonetheless, there could be another headline there. So really bullish overall on Nebius and what they are doing. Just giving you a quick rundown of all the potential things, recent news and potential news that could be coming. There's just been a bunch of different price upgrades on the stock. D.A. Davidson increased their price target to 150. The average analyst price is 161. A new data center launch happened in Israel a few weeks ago. They just opened the UK data center, which could add 150 million ARR on its own. They launched this token factory, which is really just a way that they can work directly with enterprises instead of going through a hyperscaler. So they can offer compute to large enterprises. Very bullish. They can recognize larger margins on deals like that. Avride had a $375 million Uber investment. So all these really positive news in recent weeks. And then, of course, we have the Alabama and Birmingham. There could be a potential 300 to even 400 megawatts in that location, similar to Vineland. And then new U.S. data center announcement before the end of this year. That could be the Alabama location. Toloco bullish investment or announcement hinted at by management. And then, of course, we have more firms covering the stock. So as more institutions and analysts are covering the stock, because they are pushing that to their investors, it's possible that you could see more flow show up. We did have the MSCI index announcement. Nebius will be added along with CoreWeave. So both stocks will likely increase. It's going to be included on November 24th and then effective November 25th. So that will help kind of stabilize the price as more institutional passive flow is starting to lock up the share count. So it's more than likely that Nebius will stop having these crazy swings, like from 100 to 140 and then back to 100 and then 140 again. And then ClickHouse IPO, very, very bullish on ClickHouse. Snowflake is trading, I think, like over 80, 90 billion market cap. ClickHouse is definitely growing very quickly. I even use it at my own company. But nonetheless, they own 28% in ClickHouse, and they're likely to IPO next year. And then there's an upcoming decision on the European Union AI initiative funding. And then, of course, we had like deals. Meta's talking about 600 billion deals around AI and data center space. Overall, just space is just heating up. There's not enough supply to support all the demand. And Nebius, just go watch some of the videos, follow the Nebius Twitter account, follow the CEO, follow the chief revenue officer, the technology officer. You can just see that they're operating on a very high level, and Nebius, just as a long-term play, I think is a very solid investment. I have shares, I have leaps, I have short-term calls, and I think that at least here in the short term, we're looking to see a push over 115, get back through this gap. We already filled it, so this area is going to act as somewhat of a level of resistance, but because it's already rejected there once, it is a bit weaker. So we can see price try to push through here and then start heading back towards this convertible note level. But obviously on Tuesday, we're going to see a pretty big swing here. I think at least over 10%. I think it's going to be to the upside. So I definitely could be seeing the stock trading over 140 by the end of this week. And we'll learn a lot more. And hopefully there's some announcements here. They talked about the Vineland data center location. Data One has some sort of technological breakthrough on how they're building these data centers. So maybe we'll find out on earnings. Then Unity Software. This stock is now back on my radar. It came back down to this 35.58 level, and it's been bouncing, right? So we've come down here. This area is acting as a strong level of support. Bears continue to fail to push us and fill these lower gaps around $31 to $33. And because they continue to fail, we've actually pushed back higher on earnings. Earnings were very solid. We also had a bunch of price upgrades that you can see here, I think up to $50 on some. So that's the next level that I'm really looking at. Of course, we have some resistance levels here over the next couple weeks, but I am thinking that as long as the market stabilizes, it's more than likely that Unity will push to recent highs at 47 and likely get to this $50 level, which is a pretty important resistance level. You can see in this bottoming pattern over multiple years, that 50 level is very important. And if we break through there, there's not a lot of volume above, and price could move very, very quickly. If the market continues to rally into the end of the year and Unity gets over 50, we could definitely see a squeeze. And then Roaring Kitty, who I do think is in this stock, could tweet sometime during Thanksgiving or over Christmas, maybe even post a position in Unity. We had a lot of changes into the open interest that I'll discuss here in a second. But first, I want to show you that the earnings did very well. They beat revenue. They beat EPS. They're at 23% margin. Free cash flow is $151 million. They have $2 billion in cash. So they have all the runway that they need. Cash flow positive. I think they're very close to actually becoming GAAP profitable. You can see here their create versus grow solutions, right? So like their game engine versus their ad tech, their ad platform. Grow is starting to reaccelerate on growth here into Q3. They also had customers over 100K. That's starting to reaccelerate. And then net income is starting to head in the same direction as well as cash flow. Same thing with revenue. We're starting to see a little bit of an uptick here. Really, really bullish overall on the underlying fundamentals of the business. Vector continues to have 11% quarter over quarter lift in grow revenue. So we're starting to see some early positive signs of Vector since that was released earlier this year in Q2. And the customer reported issues are down. Just overall, very, very bullish. I really like the CEO, Matt Bromberg. He's like a Harvard and Cornell grad. He used to work at EA Games. But you can see here that, the shares outstanding continues to increase. Operating expenses has dropped. So they're definitely focused on profitability as well as trying to lower that stock-based comp, but you can still see that shares outstanding is increasing. We'd like to see that stabilize, but nonetheless, overall, very, very positive. And then we also had all these price upgrades. Now, looking at the recent changes to open interest, so we always thought that Roaring Kitty had at least 60,000, maybe even up to 70, 75,000 of these 30 calls for January. That number did drop the day after earnings. So we had 75,000 volume with about 78,000 in open interest. And I can draw that out here for you so it makes a bit more sense. Let's see. So on that 30 call for January, there was 78K in open interest. And after earnings, we had this really big volume spike. There was 41 million volume, which is 4 times the average volume per day. So that was really, really positive, right? Because we had this move higher. There was this massive wick on this candle, which is like a hammer candle. So it dropped in the morning when some of these 30 calls were being offloaded, and then it rallied throughout the rest of the day. This amount dropped to around like 38,000, right? So that's a 40K drop in open interest. So whoever our whale is sold during this process, and there was about 75K in volume on the day. So if you kind of do the math, that's like 55,000. We'll say 55,000. Let me rewrite that. You can't really see it. So that's about 55,000 were sold because there was 75K volume. And then since there's a net difference of 40K here, then that's about 15,000 that were actually bought back, right? So then the net difference would be 40,000, a drop in OI, but 55,000 were sold and 15K were bought back. It's very unusual because the price actually rallied through like most of the selling that was occurring here, or price even stabilized. So what that tells me, at least this is of course all speculation, is that although the 30 calls were being sold off, it's possible whoever owned them was actually buying the shares. Maybe they were exercising those contracts. So they were buying Unity at $30 strikes, 100 shares per contract, which would be tens of millions of dollars. This is no small amount of money. But because price rallied throughout the day, I do think that whoever did own those was more than likely buying shares and exercising their positions, and that's why we saw the big drop that happened, as well as taking some profit. But then even on the day, we did see about $4.5 million of 40, I think it was 45 to 60 call spreads, debit spreads that were bought. So we're still seeing a lot of unusual option activity, and prices continue to go higher as well as hold that 38.92 level that we failed so many times before to hold. If we can hold this $39 level and push higher towards 41.71, then it's more than likely we are going to get that bigger push probably here in the next couple of weeks. I do have some November 21st spreads as well as December, and then a lot of like next year, really far out the money, like 45 to 65 calls for Unity, just in case Roaring Kitty shows up. So that's kind of how I'm playing Unity. But yeah, right now, very, very bullish price action. We've failed to break through there. Now we're starting to push higher. If we can hold 39, it's a very, very solid spot to just go long and start hoping we get pushed towards this $44 level. 47 is that more recent high, and then even up here towards 50. Really, really bullish on Unity. EOSE had a crazy move, 20%. We've been buying a lot of shares here in the last week or so, right around this like $15 area. Now we are starting to break out of this. This has over 30% short interest. A guy I follow on Twitter, Dave, is very, very bullish on this stock. He thinks that this stock could trade towards $70, which would imply a $20 billion market cap. I think conservatively that number is a little bit too high. I'm thinking closer to around $30 to $35, since they do have a massive pipeline, MOU backlog of $3 billion, $200 million from Goldman Sachs. Overall, very bullish on this. And here's kind of my math that I was showing here in the Discord, is that, I'm starting to lean heavier on EOSE. Backlogs plus MOUs would get to $2 billion in revenue from $150 million in 2025. So that's a massive growth multiple from 2025 end to 2026. But even if it did $1 billion in revenue, that would imply a $25 to $35 share price by the end of 2026. Of course, there's going to be dilution and things like that. But nonetheless, I think this is very, very bullish for this stock over the coming months. A $0.65 billion, $650 million backlog with over $22 billion in pipeline for EOSE. So if you just assume they close like only a portion of that, even just 5% of that would mean $1.78 billion. But the timing of revenue matters, and then there's also other constraints around the revenue per kilowatt hour. But nonetheless, I'm very, very bullish on this stock. I think that $15 to $20 is a bit of a steal. We could definitely push towards that 30 to 35 level. And you could see here that there's really not much to show besides the revenue is just growing rapidly here. They are more than likely going to dilute, so you have to be very strategic around buying. I wouldn't suggest chasing this stock because it is a real risk that they do dilute. You can see how much it's moved here over the coming months, or the last few months. But the levels I'd be really looking at here are the more recent highs back in May of 2021, around $21, $22. And then of course around here, around 20, 27, and then all-time highs at 32. Because there's so much high short interest, it's really hard to gauge how this stock is going to move. There's a ton of volume. On Friday, it was almost double the average, which is the 25 million on a 280 million share float. So a lot of activities going on here. I don't know if it was JP Morgan. I would have to double check, but I think there was also some institutional buyers here on this stock that was announced in the last week. So very, very bullish there. And then, and EOSE is really just all about batteries. And because data AI infrastructure is being built out so rapidly, all the Mag 7 stocks, the hyperscalers were increasing their CapEx, those estimates for next year. It's just very, very bullish on the whole industry. The sector is going to benefit from that. So like Nebius, EOSE, and then now T1 Energy, that's all in the space. T1 Energy is the solar play, US American made solar. It is starting to break out of this bottoming pattern. We continue to hold this 336 level. We actually retested around 420 and rejected there, but then we just keep ping-ponging back and forth. I think at some point we're going to break out of this range and push towards this 532 level. Around there, I'm going to be selling a decent amount of covered calls on the shares that I have because it's more than likely they're going to do another round of dilution. But overall, I still am very bullish on this. Even through a round of dilution, I'll probably just buy back my covered calls and then wait for the next run to happen, because I think that $6 to even $8 is really conservative. I think this stock can definitely push probably closer to $10 to even $13 per share over the next 6 to 9 months. But like I said, you just have to be very, very careful of dilution. You don't want to be chasing this stock. You want to be buying it on red days. They did just delay their earnings. And the last time they did that, there was a deal announcement, and that boosted the stock by 15 to 20%. So They just delayed their earnings from the 5th to the 14th, which is later this week on Friday. So we'll see what happens there, but there could be a deal coming. I'm really, really bullish on this company, especially in this $3.50 range. I think it's a good buy. I think we're definitely going to see a push over $5 very soon in the coming weeks, especially if the market starts to rally. Now, Grab did have earnings. I thought the earnings were more than fine. They are starting to grow their loan portfolio. So 65% growth year over year. Very, very bullish on that. I think as they continue to build out this super app, that is going to be a big driver, like the financial services and their loan portfolio. Just being that overall super app for customers in the Southeast Asia region. They did raise their guidance on revenue and adjusted EBITDA. So very, very bullish overall for this company. It is a slow burn. They have a huge cash position. They're just growing at like a modest pace, 22% year over year. I think that this company's just very well run, and it will continue to push higher over time. But like I said, this is more of like an accumulation play. You buy it as much as you can on dips, like right here in this like 550 range. It came back down to that previous gap that exists. You can see here, over time, it will more than likely trend back towards this 661 level and then probably get towards this 764 area. They did have a large cash outflow this quarter, and that's just really due to the fact that they're doing more loans. It's just a factor of that. You just look at the financials here. Revenue continues to go higher. They're GAAP profitable. That's continuing to move higher. We had the cash outflow this quarter just because of the loan portfolio. And same thing with like their cash position dipped quite a bit there. But it's a very well-run business, very efficient, strong management team. Not really worried about this one. It's more of just a slow burn. I wouldn't be playing like short-dated options by any means. This is mostly a share and leap play, and then just be sell covered calls when it makes sense for you to do so at these different resistance levels at 661, 764, and then I think at some point we'll get closer to that $10 level. Hopefully we can see a move here soon because I do have some January dates I'd like to see that push higher. Now Target, this one should be a bit interesting. This week we do have the ex-dividend date on November 12th, so I'm very bullish on Target for this week. I think people will buy the stock to participate in that dividend, which is a 5% dividend yield. So I would really like to see a move here back towards 95. We filled this previous gap and then rejected around 98, not 83. I think we'll come back and retest these levels before earnings on November 19th. As long as there's no like crazy volatility or drops in the overall market, I'm really bullish here on Target over the next 2 weeks. Hims had this big drop down. They did actually beat their revenue, which was fine, but earnings per share was a bit lower. The company is really well run. They are starting to see a little bit of a slowing here in subscriptions. Trump is releasing Trump RX around weight loss, basically selling compounded Ozempic through a partnership with NVO and Eli Lilly. But nonetheless, I still think Hims is a great long-term share play. It's unfortunate that it broke down this uptrend that followed through. We had a bit of a retest here on earnings, which were positive, at least on the day. And then they announced that they're going to be selling drugs to the White House, and it just really crushed overall. There's pretty negative sentiment right now on Hims and Hers Health, but I think in the long term, it's definitely a good share buy, especially in like this $38 to $40 range. You can see it's held this area multiple times before. We'll see if we can hold on here and then start pushing back through 46, back to this 52 level, and then potentially back up to 60. It's just kind of range bound in between these two areas. So it's definitely a good share play if you're just buying down here or buying longer dated call options. Hims is a platform, right? It has all this data on customers. It's growing its subscriber account. It's moving into Europe. They are expanding. There will be other drugs. They talked about potentially doing peptides once the government reopens. If this gets approved, this would be a huge catalyst for the stock, and we could definitely see it start to rally and break through to all-time highs. It's just really unfortunate that there's so much short interest here. It seems like they knew that Trump was bringing all these drugs that would really crush HIMS in the process, and they were successful. But really bullish on that longer term. Now, Amazon, they crushed earnings. We had this AWS growth. You can see how quickly this is growing. We're starting to reaccelerate on AWS. A 20% handle was posted on AWS, just like we predicted they would, especially around like Anthropic and Claude, and how much compute in the user base is growing around AI. They had really solid revenue beats all around, as well as guidance. And AWS crushed it. That's really the number that most people wanted to see, since it's a high margin business. And we had this really big gap up. There's another OpenAI deal announced. And then we had a bit of a sell-off here just with all the market volatility. We retested all-time highs as well as this more recent high and bounced. So that's very constructive. A lot of times when you have a break of all-time highs, you have price come back down and retest that all-time high level. If it holds, then there will be another push, right? Because people take profit on this initial move higher. It comes back down, and then you have people come back in and start buying the dip on it after the initial sell-off. And that's kind of what we're seeing here. So I'd really like to see a constructive move higher back towards 260 on Amazon over the next couple weeks. Most of the sell-off here was actually on lower volume. So that's at least a good signal here that the sell-off was mostly just profit taking, and then we can get this push back to 260 to 270 range. I'd really like to see this push through, especially into the end of the year. Around holidays, Amazon could perform well. We got Black Friday coming up, things like that. But I really, they built a supercomputer with Claude. They just are announcing that and rolling that out. So really, really bullish overall on Amazon going into end year. I think this is a great stock to hold. It's got a lot of upside. It could see 280 to 300 in Q1, I believe. Snapchat, this is one that most people doubted us on. I'm really bullish on it here, especially at these price levels. It's been in this big downtrend because of, a lot of stock-based compensation. There were some rumors about a potential buyout. That's why there was so much volume coming in. That is unlikely to happen in my mind, but Snapchat is starting to find different ways to monetize their user base, which is still growing, believe it or not. A lot of Gen Z, I think, are using the platform. But you are starting to see a bit of a breakout here on earnings. It had a really strong move. It actually came back up and tested this previous gap around $9.30. It just happened after hours on earnings, which you can see here. It came back up and hit that level of resistance and rejected. It is holding the breakout of this more recent downtrend that you're seeing. So if we continue to hold here, this is very, very bullish that we're going to continue and reverse this downtrend and start to push towards $10, as they are starting to monetize their user base around storage, which is very, very important. They also had a $400 million Perplexity AI deal. That's 1 year. So very, very bullish. Plus they did $500 million in share buybacks, as well as the daily active users grew 8% to 477 million. So a lot of people are still using this platform. There was a ton of price upgrades on the stock in that $9 to $13 range, right? So everything that you're seeing here from 2. So a lot of percent increase upgrades, very bullish on the stock. Here's the earning results. They beat revenue, EPS, adjusted EBITDA. And then of course that Perplexity deal was just another feather in the cap for this business. And then of course they're starting to talk about how they're going to monetize around storage plans. You can see that revenue is still increasing. Overall, net income is starting to head in the right direction. Same thing with free cash flow being positive, and then even shares outstanding. They still have a ton of stock-based comp. It's like $1 billion for 2025. But because they reinitiated another share buyback program, that's more than offsetting the dilution from stock-based comp. So overall, as we go into year end here, I think Snapchat is going to start seeing a pretty big reversal, especially if we get risk on and these higher beta names. We could see Snap push $10 to $12, maybe even more than that to the upside. It was trading from $13 all the way up to $17 not too long ago in 2024. So we'll see if they can string together a couple different quarters here, roll out the different revenue drivers, and then we can see 992. We got to get through this little mini gap. 1041 is the more recent high. Definitely going to be taking profit around this 992 to 1041 level, but I could see it pushing back into this other range that you're seeing here, and maybe even getting back up towards this low volume node right around $13. Very, very bullish on Snap. Really just bullish on everything, of course. But Upwork also had really strong earnings. We talked about AI actually being a tailwind for this business, as opposed to most people believing that it wouldn't be. Their revenue is starting to reaccelerate. We had a 4% growth year over year. This was the highest quarterly revenue for the business, as well as EPS beat. So top and bottom line both beating. Adjusted EBITDA is up 38% year over year with 30% margins. They talked about Lifted, which is the spinoff of their enterprise business. That is going live next year. There's already talks of large enterprise customers that they signed. And with all the layoffs going on that you're seeing in tech, I could see a lot of tailwinds here for Upwork. Here was like a more recent post before earnings on October 8th, where I talked about all the different benefits that Upwork was seeing. And what do you know? They did report very, very positive earnings. This 1780 level, funny enough, we actually broke above it and sold off after earnings. This happened last quarter as well. They reported earnings and had a lot of volatility and even like dumped all the way back down almost. Another red price action day, a red candle, and then we had the really strong rally. So I'm hoping that we're seeing somewhat of a similar pattern here. 1780 is a very important level because that is the level of this multi-year downtrend that you're seeing. If we can get over that level, then we're going to see a stronger push towards 21 all the way back to 25, which I think is more than likely. And then Zeta, same thing here. Zeta is really undervalued from conservative metrics. It is growing very rapidly, as well as very focused on profitability. They've had now 17 straight beat and raise quarters, which is very impressive. So they beat revenue, they beat earnings, just like we predicted they would, because a lot of people, the consumer is very strong. They're still spending a lot. Even in the month of October, they were talking about how much spend increase, like over 50% in some areas from September to October, especially going into Q4. Zeta is going to more than likely have a very nice rally into the end of the year. Very, very bullish on this stock. It actually filled partially on the previous earnings gap up. So you can see here we had this big gap up. It came back down and started filling this throughout all the market volatility. And then what do you know? We had earnings that beat. We actually came back down, retested the 1778 level on Friday. And then we actually rallied green for a moment before closing right at that 1955 level. This is an area that we've traded multiple times now. We're back over the point of control on the volume profile, which is important. So as long as this area around like $19 holds, we definitely could see a push back here towards $20.55. Really what I'm looking for is a break over this downtrend that's been holding us hostage for really months now. This stock did trade all the way up to $38 at one point before there was this kind of a Fugazi fake short report that was talking about how it was round tripping revenue and data collection and things like that, which was kind of all BS. But nonetheless, Zeta is starting to push through here. They still have that share buyback program. I think they exhausted like 30 million during the quarter. So they still have a facility in place for buybacks, but I really like to see it push through and break this orange trend line. If we can get through there, 2273 is an area to watch for, but you can see in the past, price likes to move very quickly between some of these ranges, right? Like you've had this really strong bounce here. You had a really strong bounce here. hopefully we can get a really strong bounce here towards $26 here in the next month or two. Really, that area is where I'm going to be taking a lot of profit because we've rejected there in the past. It's also been an area of support. So that area around $26, definitely take profit there. If it gets through that, then of course things could go parabolic, but it's more than likely to kind of chop in this range once it breaks above that downtrend. So just be very cautious, take profit when you can. But that's really all that I wanted to cover today. Obviously, like crypto, Litecoin is starting to rally a lot here. I still think this one's going to break back over, do a full retracement. Bitcoin, I'm also long IBIT, which I think this will break out of this falling wedge. This is an accumulation pattern. This area at 100K is held quite a bit. A lot of wicks here, so bulls are stepping in, finding support here. I think the washout in crypto could be over. And then, of course, Ethereum is actually printing a false breakdown. So this is very, very bullish. If we can hold above here, get back over 3,700, we are going to see a monster rally on Ethereum into end year if we can print this false breakdown and hold this area. So overall, very, very bullish on all risk assets. I think the shakeout is starting to come towards an end. They're going to reopen the government sometime soon, most likely, is what we're starting to see. And then we're going to see a really strong rally on the market risk assets going into year end. So hope you enjoyed this video. I'll definitely drop another one sometime during this week. Join the Discord, like, subscribe, share with your friends, and I'll see you in the next video, guys. Peace.